What's going on, everybody? My name is Lamont. Been a full-time trader for 7 years now, part of the Chart Guys team for about half of that time, where I head up our futures room and it's actually more than half of that time, where I head up our futures room and our swing report channel. In this video, we'll go over the overall market, cover some of these hype sectors, and then hit you with some trade zones, update you on some of the old trade zones, and that's it. So let's get into it, shall we? All right, so starting off with SPY here, this trade zone was shared. I don't actually recall when. I think it may have been here. Usually that's how I draw it, but that was probably it. All right, you'll have to check back. I don't recall. Either way, this trade zone has been shared for quite some time now. You'll see that the low of last week, no, from 2 weeks prior was pretty much right in the middle of the trade zone. So any initiations from there, in my opinion, it was very reasonable to be starting to take profits when you're testing this area of supply. Obviously, I don't see you guys during the week, but hopefully, at this point, you realize that, okay, well, if buyers are going to have problems anywhere, where might they have problems after holding this structure? If they're going to hold this structure, where might they have problems? They should have problems here, right? And they did have problems here for 2 days with the high of the day on these two sessions, pretty much right at the point of control of this supply zone that we had drawn up. And then you'll notice that the low of the day on Wednesday was pretty much also just a back test of this point of control. Now, I'm going to move this back. The targeting for this was based off of the monthly R2, I believe. Yeah. So the targeting for this is just, okay, well, if we're going to set this weekly high or low here, which we have now done, and if we're going to break to new highs, which we have done, then these buyers should be trying to come here. I don't really have any other targeting methods besides, or rather, I prefer the targeting methods of using pivot points, I should say. But you could also use like fib retracements, and the 1.618 external retracement of this move is also roughly right at that level. So, a bit of confluence there. You can also use like well, whatever. Let's just keep it simple, right? So anyway, weekly high or low has now been set after breaking over last week's high, and so that's at 518.36. So from here, what these buyers want to see is just to continue to press on the weekly time frame to make space for another weekly high or low, and on the daily time frame, using the same exact low, this one over here, 518.36, space for a daily high or low as well. So buyers are pretty comfortable, and what we're looking at right now is, all right, just like when we were looking for buys down here to assess whether or not the buyers would advance by trading over this area of supply that was left behind, now this area of supply has become a demand zone because we have broken above it. And you'll notice that now what we're interested in is, will these sellers be able to find acceptance back under 533.07? That's the breakout point. If they can continue to hold over the breakout point, that would of course keep these buyers the most confident, right? And you'll notice then that the Thursday and Friday session saw breaks of the level that didn't see much follow through, not much acceptance. So if the buyers can continue to do that, then that would keep them most confident. Even if they are to break, the sellers are to break back down under 533.07, if these buyers can hold over the value area high of the same structure, 530.91 and 529.11, that would also keep them confident, just less confident than if they were to be able to hold over this guy over here. Okay, so that's pretty much it. This trade is still in play, so I'm not going to update this guy, but if you didn't do that and you want to play for a daily high or low, something like this is pretty reasonable. Let me just see where the hourly would get extended from here. Obviously, this is from here. It would not be extended. So, oh, I'm sorry, this is the wrong time frame. Okay, so that's about right. All right. So if you have no position here, you didn't use our old trade zone, and or maybe you're new and you weren't here, and you're like, hey man, I want some of that action. Something like this, looking for a daily high or low, is pretty reasonable. All right, so something like that guy over here. So I guess we can like name this guy like, I don't know, trade one or something. And then for this fellow over here, we'll just set it up as such. We don't, obviously we don't want to lose that support over there. And the targeting, we can use the same exact targeting as this guy. So something like that is fine for, I guess you could call it an ad or whatnot for SPY. So that's pretty much, that's everything. That covers our bases for SPY. All right. So moving on to the Qs here. So the Qs also came into our trade zone, although it just barely dipped into the trade zone as opposed to, SPY gave us two fills, assuming that you use these date and price range boxes completely blindly, just putting your complete faith in me, in my projections that are done on the weekends without any updates for, throughout the week. Which, if you do want that, then check out our community, check out this run report. Links are in the description below. Yeah, assuming that you were just using it blindly, then you did get two fills here, right? One fill here, one fill here, so your average is here. Chop it up somewhere here, nice little gain. Throw your stop under this low, and then now you have a nice runner. Anyway, so for the Qs, all right. So the Qs are very similar and actually a little bit stronger, because what you'll notice is that the backtest of this high, right? This is the same idea. The breakout point over here has not been tested yet, right? So that's 460.55. If these sellers can continue to, if these buyers can continue to prevent sellers from getting to even touch 460.55, that is the most confident scenario, right? It's kind of like an incomplete gap fill. If they can't even get back to their next objective, which definitely is this, oh, it's actually 460.58. If the sellers can't even get back down to their first objective, right? Because what do the sellers want to do? After a breakout, the goal for the sellers is to try to negate that breakout. So it's like a war, right? And the buyers just advance. And if the sellers can't push the buyers back to where they just advanced from, well, then obviously they're not doing such a good job, right? So that's pretty much it. Space for, this is really messy. Here we go. Space for a daily higher low to be set over 433.06. It's just this low over here. And the weekly time frame, you just also did set a weekly higher low and higher high. But it's a little bit different than the SPY. Actually, not really. Not so different. So, ideally what these buyers will see now is to press a little bit more to make space for another additional weekly higher low over 433.06. It's the same level that we're looking out for a potential daily higher low. So, that's really it. That's really it. There's a little bit of relative strength here. So again, if you're late to the party or you're just, new here, I guess technically it's still late to the party. The trade zone then for the next week ahead, we'll just use these high volume areas on the way down. We know that these buyers, if they're going to stay most confident, they want to hold over this structure. So we can do something like this, I guess, would be pretty reasonable. We don't want to keep playing in this if they come back into this low volume area, but give it a little bit of wiggle room to break into that low volume area. Use this prior high here. Something like that, pretty reasonable. And for targeting, we're already above the R1. So let's just use the external retracement. Let's use the R1 for the month. All right, so that'll be our target here. Okay, so something like this is very reasonable in the next week for the Qs. And that's pretty much it for the Qs here. All right, so the Dow is showing us a lot of relative weakness, right? There's a ton of space for a daily lower high to be set under, I don't really care about this rinky-dink one. I'm going to say anything under 401 is going to be good for a price action lower high. We know that this area is key. We don't need this anymore. We know that this key supply zone is the problem right now, or actually they didn't even, the buyers haven't even been able to test this key supply zone yet. So a lot of weakness. They're getting caught up here at the value area high of this middle structure. Excuse me. So the sellers are now in a pretty good spot to set that daily lower high if they can break under 387.89 next week. To do so would set the daily lower high at 391.62, and there is space for a higher low over 380.41. I would, be kind of hesitant, to look bullish on the Dow right now. With the SPY and the QQQ looking so much better, I'd probably just stay focused there. The best case scenario now for these buyers would be to just higher low here and then higher high, obviously. But even just holding over this structure would be fine. Essentially, it would just be balancing. So I think if we were to look for, some buys here in the Dow, something like this would be pretty reasonable. Fishing off of this zone over here, you don't really want to you don't really want to be in a volume gap here if it is present like that, and it is pretty gappy there. So you know, give it a little bit of wiggle, and then something like this I think would be pretty reasonable. So we'd actually want it deeper, lower, and something like that would be reasonable if we continue to see lower lows, just looking for the potential of this structure to hold price again like it did here, which is what our old trade zone was designed around, right? So that's it, really. It's reasonable to be looking for a sell too, but I don't love that, right? Because, all right, so from a pure price action perspective, looking for a daily lower high or even a weekly lower high is pretty reasonable. But, you know, again, we're smack dab in the middle of a bunch of balance. So it's tough to assess, you know, what's going to happen when you're in the middle of a range, which is exactly what, like, think about it like this, right? Would you want to take trade in the middle of this, like anywhere here at 374-ish? Would that have been easy? You know, no. So where would it have been easier? At the extremes of the range, knowing that we've been balancing, right? If you have all of this sideways trade, what are you looking for? You're looking for a responsive trade, right? You're looking for a potential high that fails. Okay, you fade that, try to get back down to the lows of the range, or a lower low that fails. Okay, you fade that selling and then try to get back to the highs of the range. You see what I'm saying? So that's why this logic is as such, right? For this new trade zone that, oops, right? So that's what we're looking for. We're looking for a responsive trade. Make sense? All right, so moving on to IWM. So IWM, I think, was a chop and stop situation. Yes. So we shared this trade zone a while ago. And I believe, I'm fairly confident, like 90% sure, that we discussed chopping up that position, right? We're still targeting that guy, but we are chopping up this position on test of this daily no change level because this is the key supply zone that was being problematic for, blow this up, that was being problematic for buyers. Oops. Over here and over here. And then again, it happened last week. So if any initiations down here, take partial profits, recoup that risk capital, throw your risk under here. If you stop out after a couple of flips, no biggie, right? Because you already got the chop, you're probably walking away with a little bit of profit. That's how we like to get it done as more active traders. I understand it's not for everybody, so I can't help you with that. But anyway, so let's just look at a pure price action trend perspective. The trend is not bearish. We have a daily, I mean, it's been bearish since here. It's continuing to be bearish. Daily lower high resistance at 205.06. And we broke to a lower low under all of this balance. Is a bit of a red flag for these buyers. So let me just get this out of the way so it's easier to see now. And we probably don't care about this as much anymore right now. Let's clean this up. We still care about that guy a lot. Okay, so what are we looking at for now? Remember, the key for IWM is these two structures. This structure here made for all of these lows down here and this major high, right? Made for all of these lows. And then this guy over here. Okay, these major highs. And then, of course, in recent history, it's been problematic as well. Then we're looking at this guy, right? This lower guy over here made for these two lows, major lows, right? And then it made for a bunch of highs here and there, right? And there. Nope. And it made for a major low there. And then it made for major lows over here, right? Over here, over here, over here. Okay? So it's just no man's land between these two little bands that are at the edges. Now, we're also watching this middle guy, right? This is the no man's land zone, right? There's already been a battle between these two guys before in the past, and the sellers won that time. Now there's another battle going on between these two guys, and we're trying to see who's going to win this time, right? And, you know, it's kind of hard to ignore this potential head and shoulders, but I don't really care about that as much, right? Because, you know, it's just balancing. That's really it, right? Like, we could very easily see a lower low here under this key structure that doesn't see follow through, and then we'll just continue to look for balancing. It'll look like a megaphone, right? That's what a pattern trader would call it, or an expanding range, whatever you want to call it. I don't really care about that, right? But it's like people tend to get it backwards, right? It's like, for example, like the golden cross, you know, like people think, oh, okay, the golden cross has occurred, right? A shorter term moving average has gone above a longer term moving average, right? The golden cross. I forget what the actual two EMAs are that people say. Moving average, was it 20 and 50? I don't know. Oh, there's no standard one, I guess. The 50 and the 200, fine. People tend to think like, okay, the golden cross is here, and so price must go up. That's not what's going on, right? The moving averages are derived from price over time, right? And so what's actually happening is price moving up causes the golden cross. It's the other way, So people tend to get like they put too much value in indicators, they put too much value in patterns. So a megaphone or a bull flag, whatever, these things don't have any predictive ability. They're descriptive, right? They allow you some kind of contextual understanding of what price is doing. But what we care about is actually price, not the pattern, right? I mean, the patterns are helpful to help us understand what price is doing. That is it. Does that make sense, right? So anyway, yeah. So if you are a pattern trader, and you've been frustrated, right, with like, okay, why didn't this bull flag work or whatever work, right? Why on earth would a pattern work? It doesn't make any sense, right? What works is the operator who decides where they put their risk on and where they're looking for their targets, right? That's what works over time. You know what I'm saying? The pattern is not supposed to work. Pattern is just a pattern, right? So anyway, so anyway, that's pretty much it. So what are we looking out for right now for the rut for the IWM, the small caps? Is they should be trying to come here, right? These sellers should be trying to get back down to this breakout. Actually, they should be trying to get to this breakout point first, 200.41, and then they should be trying to fill the gap at 200.12, and then they should be trying to come here at 199.26. So for a trade zone, you could be looking for an aggressive trade zone off of this demand zone, but personally, I would just prefer to do this again. If you'll recall, we had some nice trades set up off of the extremes of this range. All right, we had that guy set up, got us all the way to the other side. We had that guy set up. We had this guy set up, got us all the way to the ends of the range. So, what do you think I'm going to say right now? Let's just do this again, right? We'll just look for this same exact trade zone because the context is exactly the same. The context is still the same. For example, this trade zone would have worked right here, right? And this trade zone, right? This guy worked again over here, right? This was originally designed over here, I believe. And this trade zone would have also worked over here. Wow, surprise, surprise. Why? Because of these guys, right? That's what matters. What matters is price and value, right? What the significance of the structure is based on its location and what does it represent. This guy is important because the market told us it was important. The market literally signaled to us, hey, listen, we have reversed here so many times. And this guy's important for the same reason, right? You see what I'm saying, right? And the location of this guy is also at the lows of all of this range. You see what I'm saying? So anyway, let's see, the trade zone that we can use going forward is just this guy again. We'll just do this, this fella. Okay, so ideally we'll drill. Ideally we'll do the same exact thing here and get daily oversold conditions, right? I believe the daily was oversold, or it was almost daily oversold. So I promise you the hourly at bare minimum was oversold into these zones. It was. Okay, so that's the idea, and that's what we'll be looking out for in the short term. If you want to be aggressive here, fine, but that's not where the best EV is, expected value. Okay. All right, so the dollar did not quite get down to our target, and there was a big old rip off of the I don't even remember the data. Whatever data came out on Friday was a big old rip off of the back of that news. So that's a very notable failure, right? Because all of the selling here was trying to resolve this area of demand, and then they failed. They broke under that area, right? And then could not advance to the next objective, which is this little demand zone over here, which is only just the middle of all of this big old balance. Because the real objective for the sellers is to get down here and then through there and then drill and go to zero. So the fact that they got caught up here, right, on this step up, this step that was created on the way up, is obviously a red flag, for the sellers. And it's quite notable. There's potentially a monthly higher low being set here. So if we set this monthly higher low, we still have 20 days left, but if we do set this monthly higher low here and break to a monthly higher high, that would keep these buyers positioned really well, crack this key supply that's been in the way for years now, for 2 years now almost. So that's pretty much it, right? The dollar, ideally, if you took this trade, right, because again, if you traded blindly, 2 fills, plenty of opportunity to chop it up. You should have waited no longer than here. I'm sure we've talked about taking profits on the way down. you know, no later than 103.6. Actually, I'm not 100% sure because I don't really care about the dollar so much. Nobody really trades the dollar that I know. So yeah, if I'm wrong, I do apologize. Excuse me. But in general, that's what we want to do, right? When we initiate, we want to get our risk out and some profit out, ideally, so that our remaining position we can just kind of hold and, you know, not really sweat too much. So that's pretty much it. It's gonna be a long video, I think. All right, so what we're looking out for now is the same idea, 105.270. If these buyers can't get back over 105.270, then they do not negate the change of this breakdown here and this follow through. So that's pretty much it. We could very easily reject from this guy again and then just continue to bounce like this. So honestly, this trade zone is still fine, right? Like, again, that's a long candle. So I understand that you might be apprehensive looking to sell against that, but the matter remains the same. This is the key supply. As long as they don't get back over this guy, then sells are still reasonable, targeting all the way down here. You know, traders do what works until it doesn't. That's it, you know? So, yeah. I mean, look at this strength, right? You had a beast of a move here, pretty much from the same area, and you get caught up here. So, if you want to be a bit more conservative, let these things get like hot and heavy or whatnot, you can close this, sell out, and then just move this over or above. Something like this. It's pretty reasonable. Something like that. Pretty reasonable. Okay? You would chop it up here first, get your risk out and then some if you take off half. Here, and then try to drill. And look for the drill, I mean. I'm in the basement, so it's my basement. All right, so VIX. Again, just really, really weak, you know. If we move back down and break this low, I would not be surprised with another spike in this VIX here, right? But pretty much all the VIX has been doing is just been balancing like over 11 or so and under 15. And as long as we're holding under this 1544 level, that's, you know, that's just my benchmark for like what the market has been doing ever since the October low of last year. So that's really it for the VIX. All right, NVDA. Oh, this was just for a member. I'm just wondering why there's so many drawings here. Okay. Okay, NVDA actually is still holding up really well. It looks totally fine. Daily retracement is underway. There is space for a daily higher low. Anything over 1069.40 is going to be good for one. And, you know, you'll notice over here was a very notable failure, right? They did not come back down to fill this gap after getting so close. Notable failure. Buyers moved to new all-time highs. Now we can look for the same exact thing, but over here, or a similar thing. If these buyers cannot get back, if these sellers, excuse me, cannot get back down under 1158.19, then they don't negate the change of this breakout. If they don't negate the change of this breakout, then obviously they're doing just fine because then they'd be setting a higher low over 1069.40. So, you know, it's getting so hot and heavy here that, you know, I personally would wait, right? I would wait a little bit and see some like more meaningful selling. And my point is just that I have an NVDA position. I do not want to touch it right now, or I would rather not. I would rather look for some more significant weekly consolidation because, well, it's just been ripping for right ever since this last weekly low. It's ripped up to 57%, 60%. So, you know, I don't really. I would be hesitant to buy here, right? Or even on a daily pullback, I would prefer to see some retracement. So yeah, I'm not gonna do this trade zone, but if you're like a momentum style trader, there's actually no red flags for this, right? I just don't want to do it. All right. So what I would do then is just mark this guy up over here as such. I would say this is an area of balance. All right. Okay, anyway, so yeah. So you can do it like this. Momentum style traders, you're looking for that daily higher low play. It's reasonable to be looking at it like this. All right, and then for the targeting, I guess you'd be playing for either the R2 for the month or, oh, we're already at R4 for the year. I mean, you could be playing for the R5, I guess. Let me clean up this chart a little bit. We'll use an external retracement. I think it's going to be more reasonable. All right, so the two is already there. Something like this, I think, is not terribly unreasonable if you're a momentum style trader. Again, I'm probably not going to use this trade zone, but something like that, if you insist, you know, like again, at this point, it's musical chairs, right? Eventually, eventually the music will stop for a bit, right? And there's still, even if the NVDA were to come back all the way down to here, 974, which would be, let's see, like a 30%, 20%, excuse me, retracement from here, structurally it would still be fine, you know. So I would prefer to see some weakness and then come back down and test these weekly lows. And we've already had great success back here, right? Our old trade zone gave you this one publicly, privately for the swing report subscribers gave you guys this one. So I was happy to do those plays here, but again, it is in blue sky breakout mode, so I wouldn't fault you if you want to be aggressive here. I'm just not gonna do it like that. I'm a bit more conservative. So anyway, and over here, these trade zones, we had a very clear area to play off of, right? To if they're not gonna break through this guy, then this was very reasonable because we're just looking for more balance. Man, looking at this chart now, I realize that ARM looks so similar to it. Right, had this breakout, so man, potentially a laggard here. I'm in cover called selling hell in ARM. We got a great position from the low. There should be high 69s now from all the credit, but I'm in credit selling hell. Anyway, I have to just keep rolling a cover call. Oops. All right, so that's a major tangent. Anyway, this is the trade zone that I would look for NVDA, and that's really it. All right, and you know what? All things considered, maybe a little bit more conservative like this, I think might be better. I think something like this would be, more reasonable. In which case, then, just looking for a move, even just back to here, I think it's pretty reasonable. Like, all right, so that's our conservative trade zone for NVDA for this week. Okay, Bitcoin gave you guys the trade when it was over here. You can check that video from May 10th or Saturday, May 11th. I forget. It was released on Sunday, so it was May 12th. I just let you guys know I bought this pass back. So if you're still in from here and you have runners, ideally you've already chopped it up, right? We talked about taking profits on the way up already. And so you can just leave your stop still under there because, the idea is we don't really want your risk, right? If you've taken profits over here, I mean, I guess you could, if you really want to hold for the potential monthly higher low, it can be over here, but I'm just kind of open to reinitiating. So I've got my stop under here from that trade shared with you weeks ago, a month ago. And we've already booked tons of profits on it, like a decent, amount of profit on it. So if we stop out under this low, no big deal. We'll just look to reload this same exact idea as long as we don't find acceptance back under this guy. Okay. Or even if we do, it doesn't matter. We can run the same exact idea. If we drill back down under here, pop back over, okay, we'll look for that same exact play that we did here, and then look to get back to the highs of the range. So what are we looking out for right now for Bitcoin? It's just balancing, right? It's in a daily EQ, right? Sideways trade, balance, Darvas box, whatever you want to call it, rectangle. Additionally, it's in a much bigger sideways range, Darvas box, rectangle, blah, 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 blah. Technically looking for a potential daily higher low. Anything over 66584.47 would be good for one. And I'm watching these two 4-hour structures right now, right? These two local structures. This demand zone is obviously what made these major lows here. And the supply zone is a problem right now. So the goal for the sellers is to defend 69841.37 and drill through 66909.24, which obviously is where they were having problems over here and over here. And then if they can get back down under this demand zone, they should be trying to come here, right? This big daily zone, 63629 and 61003. Okay, but as long as we're bigger picture, as long as we're holding over this guy, remember the old structure sitting at all-time high is very similar to SPY, very similar to QQQ. Bigger picture buyers are very comfortable, right? So again, potentially monthly higher low trying to confirm here. Just need a break over 71980 to confirm that monthly higher low. This is still potentially a monthly bull flag. Weekly time frame as well has a good amount of space for potential higher low over 56500. And that's really it. I don't really want to be aggressive here. Again, like I was saying before with the IWM, or the Dow, do you want to take trade when you're kind of smack dab in the middle of range? No. Right, it's much harder to do so, at least. So I don't like any. I'm not going to give you any trade zones here. I mean, here. It'll be like this, right? Something like this. If we drill down through here, all right, something like this is pretty reasonable. Look for potential lower low legs follow through, just like that lower low leg follow through, right? Something like that. Try to get back here. Okay, fine. Something like this is reasonable. Because I know you DJs out there need to trade zones. You gotta have your fix, right? So that's pretty much it for Bitcoin. ETHUSD, I'm not judging you. Obviously, I am one of you. So anyway, for Ethereum, for Ethereum here, really very little has changed for Ethereum as well. We're still watching this key area of supply. We're watching this guy as like a, you know, the guy that's before that key area of supply. We're watching essentially these three musketeers, essentially, right? This guy with this lower guy we care about because it's what the buyers tried to hold this and then make higher highs. They failed. They did not get back to the supply zone, this guy, right? And then they lower load under this guy, and then this guy made a massive lower high. SM prices way lower, 70% lower off of that structure. So now we're battling these three, and that's just these three upper ones over here. So you'll notice the middle guy right now is what's having problems, but the lower guy is trying to support price. Now, right now, after this breakout, the goal for the sellers is to get back under 3356.31. As long as they cannot get back down under there, they do not negate the change of this breakout. And so bigger picture, buyers are doing okay as well if you're holding over this fella, because as long as you're holding over this fella, you should expect price action like this. And if you break down under this guy, okay, well then we should expect price action like this and potentially like this, right? So it's very key for these buyers to hold over this structure here. That would keep them pretty happy, but as long as they're holding over 3356.31, then technically they're constructive relative to this local demand zone. You see what I'm saying? So, you know, that's pretty much it. I think weekly retracement is underway now. It's very healthy as of right now. Space for, I don't care about this rinky dink one. Space for a weekly higher low over 2814.12. Anything over that will be good for a weekly higher low. All right, so that's pretty much it. And if we do higher high from here, then of course eyes on this guy, right? If you higher high from here, eyes on 4017.56. 4116.26, and then this structure 4542.01, 4605.77. I don't know if you can hear that, but I love the tree outside my office windows. Wind's blowing through it. Sounds great. Where are the birds? Oh, the birds are going crazy now. All right, so that's pretty much it for a trade zone. Something like this is pretty reasonable, right? You probably don't want it too deep into this guy, you know, so something like this I think is pretty reasonable, and you just want to make sure that you have RSI extension if you're going to use these zones, if you're going to scale into them at least. Obviously if you're an active trader, you're fine, right? You're looking to play off of the key levels, but if you're going to scale into weakness or something like that, then you ideally you'll have all of these oscillator RSIs or whatever oscillator you use. Ideally they'll be extended at the same time on multiple time frames. Gives you a bit more edge, lets you know that there's been a lot of selling pressure that's been used recently, and then that increases the potential for a snapback response. All right. So essentially, this is a play for a weekly higher low. Okay. CCJ. So CCJ is still struggling here. The problem right now for CCJ is this guy from way back when, sitting at all-time high, made for this diving board, and so. Now we have made our way all the way back above that. Oh, we have made our way all the way back above this big structure, but we still have this tiny structure within the big structure that's being problematic for these buyers. So all-time high break with no follow through is a bit of a red flag. Holding over the value area high of that major structure, 52.6. I'm sorry, of the little structure sitting on top of the major structure, 52.69 is a good look though. And so as long as these sellers are having an inability to move back down to 50.22, these buyers are going to remain confident. That being said, higher highs here lacking follow through, we could be looking at a big expanding range throughout all of this. So we'll take it one step at a time. First, we look for the value area high. Then we look for the point of control. If they find acceptance under the POC, that would greatly increase the potential that we're looking at an expanding range here, and it will have us looking right back down at this guy. And if you zoom out, then we might be looking at an even bigger expanding range relative to this, right? This could be a higher high, and then maybe we come all the way back down and test the major point of control of, again, this super big structure that was problematic for these buyers over here, here and over here. All right. So that's pretty much it. Maybe I'll stop covering some of these other hype names, right? Because these videos are long. Thank you. If you've made it this far already, appreciate you. All right, so that's pretty much it. I continue to maintain that this is a very reasonable trade zone. That's it. Daily lower high has been set at 55.73. Got to break under 51.75 to confirm a daily downtrend. And I think we got space for a weekly higher. Yes, weekly retracement is underway, and anything over 45.10 will be good for that. So that's pretty much it. TAN, so TAN, we gave you this trade zone way back when. Came into the trade zone a couple times, got to target a couple times. Now we are currently retracing. So remember, this key guy, this big guy, I should say, is key. Right? It's point of control made for this major high over here. And it was what we designed the original trade zone around. Bottom fishing off of the point of control, targeting the value area high. So this breakout over this local supply, which was problematic here and here and here and here on the way up, and now here again, is notable. So if these buyers can hold over this value area high, 45.20, that would be the best case scenario for them, because that would affirm this structure as demand. If you can affirm this structure as demand, they should be trying to come back here, just like they did here, right? Hold this guy, come here. Hold this guy, try, as of right now, to come here, so far getting caught up here. So, you know, I don't really care to do a more aggressive like ad here, but if you insist, again, you know, if you're DGens out there, you're looking for that weekly higher low, this is reasonable. Something like this is pretty reasonable. Trying to get back to, you know what I can do? Maybe I could not care about the price action trend so much. Just do the VP stuff. Something like this is pretty reasonable, and you can be holding out for an extended target to try to get to here. Okay. That's it, my friends. And now we're watching this guy because this guy made these major lows over here, and then obviously was problematic for price here and try to support price there. All right, problematic for buyers here and try to support buyers here, or buyers try to, you know what I'm saying. All right, and finally MSOs. So remember, MSOs, huge red flags, right? To not be able to hold over this guy means that we're not doing this, and acceptance back under this guy means we should be looking out for something like this. So I continue to maintain that this is a pretty reasonable trade zone. I don't think I would do it any other way. It's got to be down here, right? Because this guy, right, is what made for these major lows here. If we want to keep looking for this kind of price action, we have to stay over this structure, and this guy is a good proxy for that. That's pretty much it. So there's no change on this. It looks like a bit of a falling wedge, you know, and if you do confirm this falling wedge, the first objective is going to be to get back over this prior low that they just broke down from, so we can move this guy now to here, 8.32. There's space for a weekly lower high at this point. Yeah. So the weekly trend has not gone bearish. Lower high and lower low. Space for a lower high under 1050. Anything under that will be good for one. And that is it, my friends. I believe that is it. That is it. All right. So yeah, that's it. Appreciate you tuning in, especially if you made it through this entire video. I thank you for sharing some of your time and energy with me. I hope you enjoy the rest of your week. Again, if you're interested in, you know, getting trade ideas every week sent to your email box, updated to our website based on this kind of methodology, we will post. If I take a trade idea, I will post my entries, I will post my exits. Same thing for Dano. Dano sends an update video in that in our swing report every single week as well. He will talk through his entries, he will post them, he will update you. So if you're interested in something like that, check out the swing report, links in the description below. If you want a community of traders to help support your growth, check out the community, links in the description below. If you just want to keep checking out our free content, sure, thank you so much, appreciate it. If you can give us a like or subscribe, we would appreciate that very much, helps us out a lot. Otherwise, that's it. Hope to see you guys soon. Farewell.